Sandeep Singal, co-head of institutional equities at Emkay Global Financial Services, joins us. Sandeep, hi, good morning. We were just speaking with Sanjay Ladiwala, and he indicated that cement prices have gone up, especially in the southern region. If you had to buy or recommend a couple of cement names at this point, which ones would they be?
Our favorite in that space is ACC and Ultratech, and mostly as the earlier speaker also said, the niche smaller play like the Alumina Cement, etc. had already run up in expectation of this price rise. And this price rise is not really unexpected. It is like pre-monsoon, generally exit price hike, and we were expecting it anywhere between 30 to 50. That is where it has come. And I am sure the large cap would now catch up, and our favorite is ACC and Ultratech there.
Okay, you don't like any of the southern cement companies, Sandeep? Say India Cements or even Andhra Cements, any of this south-based companies?
Mostly we had Madras Cement as our favorite play earlier in mid-cap space, and that remains. But primarily to answer your question in terms of this price hike that has been taken yesterday by the southern thing, my response was ACC and Ultratech.
All right. Well, now to come to the market technicals itself, are you getting a sense that the market will find it difficult to break the 7,500 ceiling that has now stayed for about 3 weeks, or do you think it could come sooner than we think?
See, let us look at some numbers, and one parameter that if we see forward PE elasticity with GDP, it is 2.9. Okay, and we are currently growing at about 5%. And if you take about Sensex EPS at 514, actual EPS number is about 392 on Nifty. Now, and we are discounting, FY 15 number somewhere close to about 16, right? And now there's two things. If this exuberance remains, and let us say GDP also starts improving and it goes to 17%, 7% growth, let's say. So 6 notch above the long-term average of about 13, we can say it can, start trading higher.
Okay.
So what I'm really highlighting is that, either we need to grow at about 20%, 22% kind of an EPS growth for FY15 over FY14 and FY16 over FY15, and the PE of about 15, 16. Yes, then 8,000 Nifty is very much possible. Otherwise, in the current scenario, when we are growing at about 15%, there is a good amount of exuberance in the market. So I would say, though 8,000 cannot really be ruled out, but trading Nifty per se would not give you really a very abnormal return, because it's just about 8% from the current level. So idea should be to look at bottom up. What are the stocks you really prefer, and that is where you would make larger money as a portfolio investor.
So what are the stocks that you're recommending to investors now, Sandeep?
It's across the sectors, like in technology space we like NIT Tech a lot, in automobile space, like in four-wheeler we like Maruti, two-wheelers we prefer Hero Honda over Bajaj, in auto ancillary space we like Motherson Sumi a lot, and a mixed play, two-wheeler as well as CV we like Eicher. So in power space, like we like KSK Energy a lot. In private banking space, we like Federal Bank. So the plethora of stock available on our website, and we are talking to our clientele just to go overweight in these stocks, and bottom-up approach would pay high dividend instead of macro top-down index approach.
Would you buy a stock like Suzlon now that has seen some fundamental improvement on the ground? I mean, it's the biggest volume buzzer today, more than 2 crore shares traded.
See, there is 2 category of stocks available at present which can give you supernormal return. One is group of stocks where there was the corporate governance issue and market has really beaten them big time. And second, stocks where there is a distress, either because of their overseas buying of some companies or high debt equity ratio, etc. So these 2 categories. Now the only thing is, as a portfolio manager, how much you really invest a proportion of your portfolio. At any point in time, these distressed stocks make sense, provided with a caveat that you see over 2 to 3 year period. There is a global recovery, there is interest rate going down by about 3%, then yes, it makes sense. Otherwise, it is really good to stick to good businesses and good management where you have clear visibility of domestic demand, and there the certainty of earning is far higher than Switzerland of the world, I would say.
Okay. In which category would Syntex Industries fall? That one is also up 4.5%, and if you pulled up a 6-month, that stock has moved dramatically after September last year. Is that a category where things are on the mend?
Syntex, Gitanjali or Jain Irrigation and Switzerland of the world were beaten by corporate governance issues. So I would say there are so many other fantastic stock available. So it's good to really look at undoubtful space than a doubtful space.
Okay. The biggest movers in the last 1 or 2 weeks have been the metal space, from the frontliners, that is, names like NMDC, Sesa Sterlite, etc. Are you recommending anything from there?
See, we are underweight on metal sector, being global in nature, and if we believe that balance sheet of United States is improving, then dollar would go strong. So all the dollar-denominated assets should really go weaker. And also we have seen that there is a weak steel demand or metal demand domestically. So in that kind of a scenario, when particularly like iron ore mining, etc., is into trouble, their prices are high, the margins are squeezed. We are underweight clearly on this particular sector. However, what is happening currently in the market is like whatever has not run up is just catching up. So there is a lot of sector rotation. Nifty being where it was 2-3 weeks ago, and on one day we run up all the sugar stocks, another day metal stocks, another day auto stocks. So this kind of a sectoral churning happening. Our position is clearly underweight in metal.
Okay. When we come to finance stocks, do you like any of the NBFCs even now? To be fair, they have also run up a goodish bit. As well, realty stocks, what is your pick of the pack?
See, on reality stock, we are again underweight because of 2 reasons. Number one, there would be a, demand is less given the particular pricing point. Affordability at these prices where the stock is available, we don't see it there across India. So price really need to soften. So we are underweight there actually. About financials, I would say yes, there are always some good stocks available in the banking and NBFC space. In banking space, our topmost pick is Federal Bank, being a very highly growing private sector bank. And on the NBFC space, we are more believing a sacrosanct sector, that is housing finance, where a rupee you give as a loan, you have a very good collateral, virtually like covering you by 2 times, 3 times of your loan in the form of collateral. So that is good, and this government has in its manifesto said that they would come up with big urbanization schemes, some 20 plus modern cities they would make. From that point of view, LIC housing finance in the NBFC space is our most preferred pick.
And from the large caps, what are your top 2 preferred choices that you guys are pushing now?
See, mostly we had an overweight position on pharmaceutical sector, healthcare, and IT as a sector, power and utilities, and media. So in these 4 sectors in large cap space, I would say Infosys is our preferred pick in the IT sector. In the auto sector, yes, we are equal weight, and Hero Honda as a large cap stock could be a preferred pick actually. And in the pharmaceuticals, our preferred pick is Lupin actually.
All right, that's a bunch of stock advice that you've given us. Sandeep Singal, thank you very much for joining us with your thoughts this morning.